Good evening, everyone. I'm Donald from the Hong Kong Legal Innovators. So I'm glad to see all of you here, and I see quite a number of familiar faces, which is good. So today, our topic would be on blockchain, policy, and innovation. So we have Brian Tang, who's the founder of Asia Capital Markets Institute, ACMI. He would be our moderator. Yeah, and we have Hugh, who's the Chief Technology Officer of ANX International. And then we got Henry, who's the Senior Manager at the HKMA FinTech Facilitation Office. And finally, we've got Pindar, who's the Chairman of Verify. And welcome. So perhaps I should pass the time to the speakers and let the discussion panel begin.
Thanks so very much, Donald. So we're so pleased to help organize the Hong Kong node of the inaugural Computational Law and Blockchain Festival, which is really driven by the legal hackers based in MIT. So I believe we're one of nearly 40 nodes around the world who are spending time this weekend to hack, to learn, and to discuss the latest developments and directions in this exciting space. In this session, as Donald had mentioned, we want to focus on the use of blockchain to build really useful stuff, both here in Hong Kong as well as beyond. As you'll hear, there's some wonderful innovations that's being piloted and being implemented every day and in parallel. And I hope our speakers today will give you a good flavor from their personal blockchain journeys and their current cool projects, which in turn reflects the journey of blockchain in Hong Kong itself. We also want to discuss the policy dimension as to how we can grow this ecosystem and developments in this still nascent technology. How do we best balance innovation and risk? As I was recently reminded, Ethereum was only released in 2015, and the original Bitcoin white paper by the mysterious Satoshi Nakamoto was only released in 2009. So if you think about it, it's not even a teenager, right? Hong Kong is a global financial center, and also has a unique legal framework that's based on the English common law, and at the same time is subject to the basic law under the one country, two systems framework. This allows Hong Kong to perhaps have the best of both worlds as we tap the innovations in both the East and the West. As was earlier highlighted, Pindar, we full of disclosures and disclaimers, as he's mentioned. Nothing that we say here constitutes legal advice, no financial advice. We will probably be talking about token sales and ICOs, but if you came here to think about which coin to invest in, this is not the right event, okay? And it's a very complex and risky area, so in the words of John Oliver, be grateful. Okay, so let's start with some sort of dynamic calibration of presentation. I mean, so this is always an issue when we have these discussions. How much does the audience know? How do we calibrate it? So let me have a show of hands. So how many of you have a legal background? Raise your hand, please. So that's about maybe slightly more than half, right? Yeah? How many of you have a technology background? So that's about a third or so. Good, good. How many of you know what blockchain is? That's a good answer. I'm going to test you later on, okay? You're going to answer that, right? How many of you don't know what blockchain is at all? Okay, a couple of newbies. Okay, good, good. Now, how many of you own cryptocurrencies? Okay, so keep your hands up. You own it for more than 1 year. Keep your hand up.
Actually,
okay, no, you hit more than 2 years. Okay, so relatively newbie still. Okay, so we'll do the disclosure later on. So I'm really pleased and happy to have this panel here that we've put together, because we've got real practitioners and pioneers from Hong Kong that are doing really cool and interesting things. And importantly, we've got the views of the regulators who are really doing cool and interesting things. So maybe if I can start going down this way here to give you, I'll start with you, Pindar. No, that's okay. I'll hand this over. So to briefly describe your journey with respect to blockchain and what brought you here, don't talk about your current projects yet, but just your journey. When did you start? And maybe we can start with when did you buy your first Bitcoin?
I'm not going to disclose that. What I will disclose though is this was a hobby, and I first got into. I was at Financial Crypto 1 in Anguilla in 1997. So that gives you an idea of this crazy space that I play in. And how I got here is by accident, which was basically a hobby. I missed Bitcoin actually, and it was actually due to a very good conversation with Joe Ito, who started the MIT Digital Currency Initiative back in 2013-14. I was very curious as to how to make payment online, what identity online looks like. And he said, oh, you should look at Bitcoin. I said, yeah, I took a look at it in like 2010, it was just garbage. He said, no, you took a look at it again. So it's actually thanks to him that I took another look and it was like, oh my God, this thing's grown. And it was crazy. But I came out of the Bitcoin closet more publicly in 2015. It was several years into the sort of Bitcoin scaling wars. And so as a volunteer, I helped organize Scaling Bitcoin, which managed to scale the protocol, as well as I introduced and brought the blockchain workshops to Hong Kong in 2015. So that's my journey, but I'm sort of more interested in how, before that I was pioneered the internet here with Bob Cogshaw in 1993. So many of the challenges, the policy challenges, and how do you wrap your heads around this new tech, to me it's like, guys, I recognize this. But we messed up with the internet. The internet became a highly concentrated, centralized. So for me, my journey and purpose here is to do what I set out to do when I dropped out of university, which was build some amazing social infrastructure. And so this to me is a second bite of the cherry, to decentralize the very internet that I helped pioneer. So that's kind of the odd thing. Right now, as a chief architect of the Belt and Road, Hong Kong, we have a unique situation. We have a use-by date in our law. Right, 2047. So my goal here is to build this global trade infrastructure for the Belt and Road, so we can have public governance, private business, and we can export Hong Kong's way of life to 65 different other countries.
Thank you. Just briefly, so I believe you set up Hong Kong's first ISP.
With Bob Cogshaw,
Right.
93.
Right, so a real kind of pioneer here in Hong Kong. Maybe I'll go over there to you, Hugh. Start with you, and we end up with Henry. So, some of your background was in banking first. What was your journey like?
Yeah, I guess so. I would tell off my accent, but I'm Australian, if you can understand my accent, that is. But yeah, I came to Hong Kong and worked for a couple of years for HSBC. I was a global FX architect, which is for the wholesale banks, so looking front to back, all aspects of trading over 48 countries and that technology. And honestly, if you're going to work for a bank in Hong Kong, the Hong Kong bank is a pretty good choice. A lot of smart people and a well-respected brand. But that said, I guess I was part of the demographic that was a little bit disillusioned with monetary policy and the moral hazard that occurred during the financial crisis. And when I found out about this non-sovereign currency called Bitcoin, I actually was quite intrigued to the philosophical reasons more than anything else. I mean, as a hardcore technologist, and their technology is super interesting, but for me it was more philosophical. And part of that is my view that as information sharing has become easier and more prolific, then I feel like the boundaries of societies and cultures have changed somewhat. You know, first you have the family unit, and you have, you know, the kind of larger and sovereign boundaries. It's my view that with the internet, you've kind of got now this subconscious that span the world. And it's also my view that a currency tends to be quite tied quite closely to the needs and objectives of culture. So the idea of some subculture that spans borders and therefore is managed by the internet itself rather than any one central planner, being its borderless currency and borderless society, I found that super interesting. So myself and a couple of like-minded colleagues founded ANX 5 years ago, which is, over the years, I like to say it's got quite a nice trusted brand to it, because we've been very transparent, very public. Customers come straight down to the office, and about 140 staff in Hong Kong. So we have the Bitcoin, Ethereum, Ripple cryptocurrency exchange called ANX Pro. We also offer the whole thing as a service platform, and that drives about half a dozen other exchanges. They use our infrastructure. And we've got a wholesale markets brokerage business called Octagon, which the average ticket size there is about 1 million US. And so that's the biggest in Asia, third biggest in the world. Trades about $1.5 billion US a month. So quite decent in scale, I'd say. And we've also incubated a lot of companies where the ex-employees moving on and said, well, you know, we love your spirit, but let us help. And so we've founded a couple of other companies we've incubated over the years. So kind of a bit of exposure to lots of things. In the past year and a half or so, I've been trying to actually put some time back into our community, and I've been working in the Hong Kong Fintech Association as well.
Great. Glad you put in a plug there. So Hugh's the co-chair of the blockchain committee, and I'm the co-chair of the RegTech committee, the legal side of things as well. So thanks for that sharing. So Henry, on to you. I think you started more in the data protection privacy side of things.
Yeah, that's right. And to be honest, I'm probably the newest kid in the block, as it were. My exposure to blockchain and crypto and things like that was since only last year. Only less than 12 months old, as it were. My interest in exposure to blockchain is really after I joined the HKMA FinTech office. By the way, the FinTech office itself is really a sort of startup within the HKMA itself. We may have 1 or 2 missions, and just like any other sort of startups, don't really have sufficient resources to deliver what we want to deliver anyway. So because obviously blockchain is one of the very cool technology and sort of changing, sort of game-changing technology. So the HKMA has put in a lot of resources looking into that. Suffice to say that we've actually been publishing 2 white papers on the technology itself, but not just technology, but the application as well. This is the second version as well. And obviously I have to be involved in the writing of the white paper and start to understand the technology and so on and so forth. And as Brian was saying, that my interest, my daytime job is with HKMA. I also moonlight as a part-time academic, and my interest is in data protection. And obviously, the nature of blockchain, this cross-border nature, this immutability, and so on and so forth, really fascinated me. So I've been spending a bit of time looking into how to deal with data protection's principle of rights to be forgotten, right to erasure, cross-border issue, localization, and things like that, and how on earth, as it were, blockchain we can deal with it in blockchain scenario. And obviously, going back to the HKMA, we still put in a lot of resources, trying to understand the technology and more importantly, understand the implementation issue with that, and try to figure out, is there a way out? Is payments the only solution or only application of blockchain? Are there other sort of financial applications that blockchain could go into it? If we do that, is there any implementation, governance, control, legal and regulatory issue we have to deal with? Are there solutions to that? And that's why we actually put in a lot of, maybe we'll go into that in the next question also, but fortunately enough, I don't have to deal with all those legal issues and questions, because we actually have the Hong Kong Law Society as well as a few prominent professors to help us put in some advice. Maybe I'll have some time to talk about that later on. So just a general, my journey as a blockchain side.
Great, thank you, Henry. Maybe for the live streaming audience, the HKMA is the Hong Kong Monetary Authority. They are central bankers here in Hong Kong and the main regulators in relation to the banking and financial services industry. So they're very important to us.
Oh, sorry, talking about that,
yes.
I forgot one thing.
Disclaimer time.
Yes, that's right, exactly. I'm very conscious that I'm not lawyers, and also there seems to be some competition on the disclaimers. So, as Brian was saying, that HKMA is basically the regulator for the banking industry. So, as far as crypto assets, non-currency, as far as we're concerned, because it doesn't fulfill all the characteristics of currency and ICOs, HKMA is really not confident of all these, so it would be inappropriate for me to comment on that. I just want to clarify that. Some more disclaimers.
But for those of you who, we are also very transparent. When people come to Hong Kong and they look at the notes that we have, and it says, Bank of China or HSBC or what have you, like, wow, what is this? So I think we are very transparent in not only sort of our regulation, but also the very notes themselves.
Great. Thanks so much for that. So I think, in other words, if you have tough questions as to whether it and how it should be regulated, ICOs in Hong Kong, don't ask Henry. This is not the panel again, right? So now, turning to some of the current projects, maybe if you don't mind, Henry, we'll come back to you again and then we'll walk around the table. So, because the work of the HKMA is quite well documented, as you said, this is the second version of the paper. The first version really talked about 3 POCs. proof of concepts, so mortgage loans, trade finance, and digital ID management. And this one focuses much more on trade finance and Project Obsidian, as I understand it's called internally. So would love to hear more about your and the authorities' journey in relation and to some of those kinds of projects and thinking about that.
Yeah, sure. I mean, we started looking into this year and a half ago. Basically, we don't want to just look at the technology itself, because there's been a lot of discussion among central banks and regulators on the technology, but we really want to sort of bring it on down to earth, as it were, see how it can actually fit into the financial sectors. So instead of just looking at academics, as it were, we actually team up with a few banks and try to figure out what the proof of concept areas, what the real application areas are. And also we have to look at the more possible avenues and things like that. And at the end of the day, we decided there were 3 areas that we could actually try to use blockchain to see how it works and whether we can learn anything. One is on mortgage valuation, one on digital identity management, and one on trade finance. And basically, the proof of concept have all been completed. There's been success and well, I think they are all successful, but I think what we've learned from it is that there are many things that make, well, polish the cat lovers. There are many ways to skin a cat. Blockchain being one of them, but is it the right way or is it the right technology to do it? We found that it works for digital identity management, it works for mortgage. In fact, for the mortgage one of the banks in Hong Kong actually commercialized it and also is now working, expanding it. But the really killer, as it were, among the 3 proof of concept is on the trade finance side. Because I don't know how much you know about trade finance, I won't confess I know a lot about it, but apparently I've been told that over the last 20 years, people have been trying to digitize the whole process without really any success. And come along with blockchain, to give people a hope and expectation that by virtue of the technology, these different stakeholders can actually work together and trust one piece of software as it were. And so basically our proof of concept, we team up with about 5 banks in Hong Kong, set up this proof of concept actually kind of sort of prototype working, demonstrating it with people how it could work and how you could visualize how it was like and so on and so forth. But academically, was first the white paper is concerned, that was the end of it. But then several banks got interest in the prototype, and they actually decided to, out of their own initiative as well, and commercialize the whole project. So taking on what we've done, and now they're actually building a so-called Hong Kong trade finance platform with more than actually more banks than 7 banks who are interested in it. We have to actually put a floodgate in and stop people from coming in while we're building up the whole thing, because we really have to. We don't really want to have too many people around falling over each other as well when we're developing the whole thing. But once we have it up and running, we can actually have more people joining it. But then you probably ask, what's the point of having trade finance platform locally in Hong Kong? So, trade is always like cross-border trade, and that's why at the same time we actually understand that Singapore is doing something similar. So we actually talked to the regulator in Singapore, the Monetary Authority of Singapore, and team up with them to have a cooperation project. I've been told that it's probably one of the first, if not the first cooperation project between Hong Kong and Singapore of this scale anyway, to actually build a highway joining the 2 trade finance platforms together. And once we build that become the sort of de facto standard of plugging into this open platform trade finance system, and we could actually introduce more other jurisdictions into it and expand the whole thing and really build a sort of working system using blockchain on trade finance. So that's the journey so far.
Great, thanks. So Henry, has a launch date been set yet? I know it's still early-ish days, but what's the target date?
Right. We've been hoping that we could actually launch the Hong Kong version as well by the third quarter this year. And then the link between Hong Kong and Singapore around first quarter of next year. So we're moving very fast with that. I suppose the technology must allow us to move that in that speed as well, which is good.
Great, thank you. If you don't mind, I was going to move over to Pinder, because Pinder, your project is on Belt and Road Trade Finance as well. So I thought I'd lean over to you, and maybe you can speak about your project and how it interacts, shall we say, with this initiative and others.
Well, Henry and I have actually interacted here, and many of my consortium members are very excited about your platform. Our approach is in Hong Kong, we believe in public governance, private business. So this is the private, sort of the anti, the opposite one. We don't think we can eventually work together, I believe, although this is primarily banks. As many of you know, the two areas that Henry mentioned, 3 areas, 2 of them were identity and also trade finance. So the Belt and Road blockchain is basically providing a governance blockchain for identity and changes of state of legal liability. And the reason the innovation of the Belt and Road blockchain with its alternative dispute resolution, very similar to ICANN, and I had a role in that way back when, was the first vice chairman of that, is that how do you have an identifier? How do you know that this company in Kazakhstan is who it claims to be? So it is about companies as the base layer for trade, and the identities previously with global trade were effectively gated by banks. You didn't know who you were dealing with, but you would trust the counterparty. Now, given these are peer-to-peer technologies, we don't need that anymore. Banks will play an important role, okay, but no longer is it the monopoly of who to know through the banks themselves. You can liaise directly with the company registry in the different economies. So we have a 0 to 99 ranking to try and reduce identity risk for knowing who you're dealing with. But more importantly, it allows a company to basically operate an octopus for ID, right? It's basically mapping the private key pair between your wallet. Octopus is a very, very successful payment mechanism which makes payment almost instantaneous. We pioneered that almost 20 years ago. This has nothing to do with payment. We do not do settlement. We only manage one thing, and that's identity and associated identity risk. It's a one-trick pony. It's very, very boring. Right? The value proposition is that it can also operate smart locks for containers. So as your goods flow through, you can reduce the stoppage time. The more important thing, though, is that how does a company own a digital asset? Right? Because we individually own them through our smartphones. But how can a company own Bitcoin? Or how can a company own Ethereum? How can I be sure that that QR code for that wallet maps back to the company and not the individual directly? So we rely on CAP 553 of the Electronic Transaction Ordinance to basically provide the legal certainty for Hong Kong incorporated companies so that they can have a blockchain identifier. This is what we call the BNS, right? The Belt and Road Naming System. The benefit of that is that now we have a very clear legal mapping for the legal incorporated entity for Hong Kong and the fact that it can now control its keys. So that when I see that there is a QR code for company X, many of our SMEs, I can then have a mechanism for finding whether that QR code maps back to that company. But the legal innovation is that once we can do that, any changes in legal state, be it a bill of lading or what have you, we broadcast that on the Belt and Road blockchain. Now the reason why that's necessary is when it comes to identity disputes, or when it comes to who has title, not only is there cryptographic certainty, which is what the blockchain relies on, but we need to get past legal counsel for business. And that means legal certainty. And in Hong Kong, we're very proudly having the rule of law. As I mentioned earlier, we are very unique. We have a use-by date 2047. So in strategic interest, it will be very important for us to export our governance model, as I say, made in China, trusted Hong Kong, right? So that we can deal with the digitization of trade. But this is at the level of identity. We can work with banks. We'll be very happy to work with you. But nowadays it's a much larger world because a lot of trade credit, trade finance is actually trade credit, not necessarily provided by banks. Now the reason why we begin this way is because with the internet, this is very similar to the days when we were dealing with telephone companies. We needed to have telephone companies to have our lease circuits, and yet eventually we kind of ate their lunch. This time we're going to have the same pivot. Now, the reason why this is important for Hong Kong is that these blockchain technologies, as Hugh knows, gets rid of the middleman, right, or the middle person. And therefore, Hong Kong, we're the consummate middle person. So we have an existential crisis if we don't understand that our rice bowl is going to be breaking pretty soon. So my attempt, my primitive attempt, which has 95% failure, super high risk, uses the internet approach, which is we're not going to rely on bilateral negotiations for 65 different economies. We are going to say, here are the business processes. You're welcome to adopt these standards. Please join in. And our first application is the halal blockchain, which implements Islamic financial principles, primarily because you can't have interest in a fixed token system. More importantly, along the Belt and Road, 1/3 of the economies follow the Islamic faith. So there's 24 economies out of the 65 who follow and are basically Muslims. So my question here is, how can we have Sharia compliant smart contracts? I'm interested in that answer.
Wow. Lots to think about there. So it even involves and includes Sharia scholars out there who may be interested in getting involved in the space. I actually spoke at the World Islamic Economic Forum last year, and it was fascinating as they grapple with some of these issues that the Islamic world believes that the inclusion aspect is so important because of the nature of a lot of the economies, but still grappling with the technologies and how they apply their principles there. So just to clarify this, so with your platform, so yours primarily deals with identity, but your platform will also deal with payments, is that right?
Not so much payment at the moment, it's trade finance and paperwork on
The paperwork, right. Can I clarify? I mean, and this is a very natural thing. Most of society, when we can normally do what I call linear incremental improvement, right? We do 5%, 10% by digitizing existing processes, and that's great, and it will happen. But I would say Bitcoin is a breakthrough tech, right? So we're not talking about 10, 50% improvement. We're talking about 1,000x or 10,000x, and these do not happen every day. The internet was the previous one, at least in my opinion. And so once we understand that, then we can understand that when you do breakthrough tech, it's no one's going to ring a bell, right? That this is going to be. But if you do linear incremental, that is totally valid. You can improve existing processes. Bolero was the previous one that they tried to digitize trade finance. But you have to recognize that blockchain is all about incentives, right? And when you have a very thick, 6 pounds of paperwork for every letter of credit, and it's a very juicy business, you can afford the waste. But when we're talking about micro SMEs, especially along the Belt and Road, especially in basically East Africa, in places like Kenya, then we're looking at something different. Now, our vision is provable sustainability, so that all trade along the Belt and Road is provably sustainable, and that ultimately the phone is the company. So that 2 people or a single person who operates a smartphone, mom and pop store, can be a first-class citizen on the internet to do trade. It's a different world. I don't think they're incompatible, but the starting places are different.
Again, inclusion is very much part of the theme here. So Hugh, getting a little bit away from trade finance, you've basically got a huge dev shop. I think it's one of the largest here in Hong Kong, and certainly competes on the world stage. You're building, besides the crypto exchanges, and really also going into the decentralized ones. Through your shop, you see and assist lots of different businesses in terms of building lots of cool blockchain projects. Maybe you can share some color here in terms of the kinds of things you see.
Sure. But if you don't mind, I might start that just by being a tiny bit philosophical and trying to explain why engineers find them so interesting, from an engineer's perspective. Engineers have followed this journey where in the world of software that drives computers, drives applications, drives business processes, and lets them all talk to each other. This world of software, there's layers. One of those layers is the bare operating system, just the technology that drives every device and every computer. And then there's different layers that go up the stack until it becomes more and more specialized for one particular part. And what engineers with a few grey hairs have seen over the years is the inexorable commoditization of that stack. What that means is the base layer that everyone uses, eventually someone created it and released that IP in an open source manner. And once that was the case, and everyone could share and use and modify that IP without having to ask permission, without having to wait for anyone else, that led to what we have now, which is the most popular operating system, which runs on most of your phones, and over half of the servers in Amazon is Linux. Okay, this open source thing has taken over the world. That's the operating system layer. With the internet, we've seen the same thing. This open protocol that anyone can use and connect has taken over all forms of communication. And from an engineer's perspective, you look at this thing called blockchain. And this thing called blockchain is open. It lets you automate and engineer financial services. and it's open and free and anyone can use it. So from an engineer's perspective, I guess you have to be a little humble and say, this technology looks and smells a lot like those layers beneath it. I don't understand exactly every use case and whether it's best for that one or that one. The learning around that will take a generation. You know, it'll take 10, 20 years of learning and mistakes and failed and successful projects. You can't expect you can design it and understand it in advance. But what I do know is it's open, it's free, and it's going to help automate financial services. So that is kind of why all of these engineers keep leaving their banking jobs and going and working in blockchain startups. They just see another way. Let me talk about the two main sorts of blockchain we have. And it's always important to have this delineation when you join a conversation. First of all, there's a thing called a private or a permissioned blockchain. What that says is this replicated database technology looks really interesting. You know, we can make our business processes faster and cheaper and more automatic. And that's, but on the other hand, we want to control it, whether for regulatory reasons, compliance reasons, or whatever it happens to be. So that's the controlled but still interesting technology. People talk about enterprise blockchains, private blockchains. At the end of the day, it's a consortium of people who just agree to share on a blockchain, but it's controlled in a closed system within those parties. The other sort of blockchain is when people talk about public blockchains or cryptocurrencies. Now, and this is of course the ilk of Bitcoin. So when you have a system which is a public cryptocurrency, what they're saying is the technology is only half of it. The other half of it is a system of economics that incentivizes all of the actors in a system to collaborate around this thing and make it something that you can trust. And that's what cryptocurrency, that's what public blockchains are. It's actually only half technology. It's half technology, half economics. Now, there's a reason this is interesting. And so when people are looking for the creation of value in a value chain, they're not looking to see the same value chain made faster. Okay, so if you go to the existing value chain and say exactly the same process, but make it all faster. That's not a disruption. Okay, that's incremental creation of value, or it's cost savings, basically. On the other hand, if you've got a public cryptocurrency, I'll send some money to Henry. In the traditional world, it might be a payments network, a commercial bank, cleared through a central bank, another commercial bank, and the same or a different payments network on the other side. There's a lot of entities in that value chain. Now, if I'm sending value with a public cryptocurrency, there's me, there's Henry, and there's the internet. Okay, that actually starts to look a lot like a different value chain. There's only two actors in there, possibly three. So that's when people start to think, you know what, maybe that's a different value chain. Smaller, there might be true value creation. And so the business, if I talk about the business I'm in, which is basically trading, all aspects of trading around public cryptocurrency. We also assist some projects with payments in emerging markets, with enterprise or permission blockchains. But most of our business is around public cryptocurrencies. And I think it's a little bit a factor of why we've survived. We've never taken major funding at all. We're actually pretty much self-bootstrapped and cash flow positive and employ a bunch of people. One of those reasons is we don't try and guess how everything's going to pan out. We're a commercial business, we've got wages to pay. We just have to look at where money can be made, frankly. And if people want to trade cryptocurrency assets, we'll service that need. And for me, I think that is actually quite a solid pointer at where value might be. If there is actually money to be made and there's a growing economy, there's probably some value in there somewhere. So most of our business is around that. But I guess to close off his comment, I would say a VC who I quite respect told me once, if you are looking for value creation, don't look at raises, right? Don't go say, that company raised $200 million, they raised $500 million. Look for exits. You say, well, that company, after 4 years, sold it, someone bought it. You're most likely to have found someone who's caused a significant value creation. And so that's most of our business focus. And even though I certainly like the technology around private enterprise blockchains, I do tend to steer most of me and my team's focus towards the public, because it seems to be where the value creation is coming from.
In fairness though, Hugh, and look, now you know why I am so happy that Hugh joined us. I mean, that was a wonderful explanation, it really was. But in fairness, you did do a raise. So maybe you can think a little bit about, given your earlier comment, why you did do a raise and raise the token offering.
Sure. So we did a token sale, but actually I wouldn't say we did a raise. Our commercial entity did not do a raise. So we're big believers in this concept called decentralized exchange technology, where two parties can trade together, and there's no central party they're clearing through. So all of the trade happens on none of it, so there's no credit risk. Super desirable, also quite complicated on a technical level. But we're big believers in this decentralized exchange technology. So we created and registered a non-profit entity in Hong Kong. We created a white paper saying what we're going to do. We had the advice of dozens of lawyers to help us carefully manage a complicated legal landscape. And so we raised about $18 to $19 million from people who wished to participate, and all of those funds went into a non-profit. And in fact, that team is working away quite intensively building that, but yeah, there's a complete sandbox around that. There's a minimal level of service level agreements. As that team's been mobilised, we pretty much just sheared them all off from the commercial entity, and it's basically standalone now, non-profit, with a charter that PwC has helped us to craft to protect all of those funds. So actually we raised, but more for a research project and nothing to do with our commercial entity.
Okay. Yeah. No, I just wanted to mention that because the first time I actually met Hugh was organizing a panel on best practices on token sales, and he was talking about that. So because you had mentioned you didn't, I just wanted to clarify that. Right. So, sorry.
I think the research, this research actually, there's still very early days in the tech. And so one of the things that Shinichiro Matsuo, one of Japan's top cryptographers, and we created this BeSafe.network, which is now a global network of 24 universities doing research into this blockchain technologies. So it's still emerging days, right? This morning we had the release of LNG, the Lightning's daemon on the Bitcoin mainnet. It's all very, very early days. But I think Hugh really explained very nicely that you need to understand this version of this concept of layering. But what is different, I would just want to amplify this, Hugh, is that previously the value, right, the economic value, back in 2016, one of the large VCs in the space, US Union Square Ventures, introduced the concept of fat protocols, right? So using your homework exercises to Google what a fat protocol is. The reason why you need to understand this is that previously we had these base layers, right? TCP/IP, but most of the value was at the top through these things called apps, right? Which you have on your phones. But cryptocurrencies and blockchain are different. And the reason why it's different is because the value is in fact inverted. It's not you having very thin protocols at the bottom and all the value extractions at the app level. With cryptocurrencies, in fact, all the values much lower in the stack. Actually at the blockchain level. So that's something that you need to understand, because I'm personally only really interested in public blockchains, because it's in the sharp end of where all the interesting technical research that goes back to financial crypto and 20 plus years ago.
So that's how I guide my career, because there is unlimited time in the day, but I'm still not that critical of private blockchains, and that's just because of this view that any form of service or product that simply involves some fashion of shuffling paper. Once upon a time, it was taking files from one filing cabinet to another. Might be lots of chains of people doing that, but ultimately that's what's happening. And then that was automated. Now you've got lots of people's databases and files being shuffled across those. So any form of service that is basically just moving information around, that's on a race to zero. That will be standardized, it will be automated, it will stop being a source of margin. And obviously, as it starts to become more inventive and need more creativity and need a human mind, even that's at risk obviously with AI, but certainly well before AI comes onto the scene, anything that's just data movement is on a race to zero. And you can't look at blockchain and not think it's the closest thing, it's the closest tool to solve that problem than anything else in the market.
In fairness to private blockchains, even though I just slagged them off, it's very similar to the discussion we had with the internet. The public internet was really scary. You had all these criminals and all this bad stuff. And so everyone went to intranets, right? They built these intranets because it was safe and everyone and that's very similar to where I think we are now. Public blockchain is too scary. We can take the same protocol, we can call it enterprise, and then we can use it. And that's fair enough, because it's actually a learning journey, because in the end, the simplification, the massive economics are going to come through understanding the correct implementation of the cryptography. And the reason why I'm supportive of public blockchains is there's more eyes on that, and you'll get better engineering. Like with this volunteer effort, Scaling Bitcoin, Premier Tech Conference, I always say that I'm the most stupid person in the room, which means I'm in the right room. And Hugh was there, and I was humbled. Right? We've got really bright and gifted engineers who are trying to beat on this tank. And I think Bitcoin's going to be very interesting and perhaps win because it's got a great community of really smart engineers.
So let's flip over to the policy side of things. You've heard about how this technology really is revolutionary in terms of how you think about ways of building the stack, in terms of ways of business and ways of models. So what are the main challenges do you each see in terms of growing this? I do feel that sometimes with this space, there's some people who are guilty of saying, as Henry was kind of alluding to, if you have a hammer, everything's a nail, right? So everything can be solved by blockchain, and I think we all probably agree that that's not necessarily the case. So, but would love to hear some of your initial thoughts in terms of what are the best use cases, but also then what are the policy kind of impediments to kind of addressing some of that. You want to start with that?
Sure. Okay. So I feel there is many use cases, obviously, and people like the idea of things like provenance, which is, yes, you can see the data lineage or a piece of food and see it all the way through a supply chain, or you can stop diamonds being forged. Fantastic use cases. I spend most of my time, and I give my background in those related to financial services. And within the financial services world, so one of our clients, they're a financial inclusion player. So they go into cash-based economies and they say, instead of passing dollars around, pass a token version of that around, put the dollars in a bank account and it can just stay there. And then instead of using these older technology, more expensive payments networks that aren't even in your country, just use a blockchain and do it for free. And so that's their business model. They're in 11 jurisdictions now. They use a permission blockchain to make sure that banks and regulators are very comfortable with that. But they give the population free mobile payments, and they also give them the sense of dignity because it's a very low-cost way to achieve a bank account in jurisdictions where people don't normally have that. And that cultural pride, is super important to their value add. But blockchain is very low cost. It's for something that involves immobilizing an asset and then allowing that value transfer to happen over a payments network or over a network. It's very cheap, very fast to deploy. It's a very simple job and it's very good at it. So that's certainly that's one of the key use cases. It does make it so easy that, of course, you start looking at it and thinking, well, what does that mean for money laundering and illicit funds? But there's two sides to that. So yes, it's very easy for funds to be moved, and and especially in a borderless nature. You don't have to try and smuggle cash or gold bars across border if you're working with illicit funds. On the other hand, it's very transparent. It's very traceable. And some of our own regulators have made comments about the possibility of using this for anti-money laundering. And there's been a lot of high-profile cases where cryptocurrency blockchain data was used as evidence, to. I'm sure this audience will know better than me, but I understand that the blockchain data itself was accepted as permissible evidence and used to affect a prosecution. So there's situations where it has been used as evidence and it's traceable. It doesn't go away. And then of course there's all those privacy considerations around that. But I wonder if there's anyone who actually knows one of these cases who could comment on it, given the audience.
No?
Okay.
Perhaps not today.
Not today. All right, maybe next time. But okay, so you've got this thing that's very good at financial services. It's very good at being borderless, and it's very good at creating assets and offering services and trade. Now, when something becomes that easy to do, it's inevitable there's going to be good actors and bad actors in that economy. Like there is any economies. We were talking about this earlier. Like I don't believe bad actors is restricted to a technology. You could go and look at pink sheets in the States, and you're going to find some, inappropriate behaviour. But that said, it is very easy with this technology. But right now, it's very hard for regulators to tackle. I mean, everything in the digital economy is moving so fast and so borderless, it's already hard to regulate, let alone this new thing. And so cryptocurrencies as payments, fundraising via some form of an ICO, it's one of those things that's not regulated, so as a result there's not much consumer protection, and for operators like myself, there's no surety. There's no way that I can plan to conduct my business with the best possible motivations, and know that I'm following the checklist, I'm compliant with all regulations, because it's just not regulated. And in most jurisdictions, the regulations are nuanced enough that they won't be retrospective. But we have seen in some jurisdictions regulators introduce retrospective laws, in this space. And so, the lack of regulations is it's not good for consumers, and it's not good for the businesses trying to operate in the space.
So more regulations are better, Hugh? Is that what he's saying?
I think I'm just not a very polarized person, right? You need balance, you need yang. So as far as I'm concerned, you need transparency, you need to know that it's accurate data, and you need to know there's full disclosure and risks have been disclosed. But I also believe that you should not take away the right for an individual to express their own risk appetite. And I think that's been a criticism with some of the IPOs and some of the success stories that we've seen in the world. It just wasn't accessible to the average denizen, of the world. There was only a limited number of already wealthy, investment banks that had first access to the opportunity. And I believe that let individuals express their own risk appetite, but they should be protected from fraud and any misleading information and full transparency. And that would be right-sized regulation.
So thank you very much. I'm conscious of the time as well, so maybe I just want to put that question to you too, Pinda. So what are the main challenges do you see from a policy point of view, and perhaps as a wish list, what might you want to see more from policy perspective? People are talking about standardization, so there are ISO kind of standards being put together. Cross-border is an issue, right? Having potentially more regulators, understanding each other and forming common views. What would yours suggest be?
Okay, so the fundamental tension here is between sort of geography and topologies, the network. And we saw this with the internet, right? So rules of law are basically geographical, and networks don't really care that much about geography, they don't see borders. So the fundamental tension here is between geography and topology, and we've seen that with the so-called internet governance discussions. How do you govern the internet? Well, it's actually getting more complicated because now we've got cryptocurrencies. What I'm interested in is basically jurisdictions being willing and able to take some degree of regulatory risk to introduce a framework, because those, even though there are sort of a mix of good and bad actors, there are good actors, and the good actors would like to be regulated, right? So what are the rules? So for example, this morning we have Gibraltar, we have a friend from Gibraltar here, who introduced their, and I think you spoke about this last night, a way of looking at viewing that these tokens are effectively products, right? Not necessarily. So these are all very interesting innovations, and we've got stuff in Zug in Switzerland, you've got Delaware, etc., and we have our own little attempts here in Hong Kong, right? We classify a lot of this, I think, as a virtual commodities, right? What is that? I don't know. Let's define it. That's the opportunity that we have. So I don't think anyone has the answer, but this time round, my concern is that the mindset and typically the rule of law among you are sort of, I would say, ex post facto. Right? We have the rule of law, and then when we get into trouble, we go use the courts as the way to settle. Right? But with digital, with blockchains in particular, even though I don't really know what a blockchain is, just a data structure, is that we use the actual data structure as the jury, right? And so this is why I think the regulatory regime needs to move to an ex-ante approach, right? Which is how you write those smart contracts. You better be damn sure that you wrote it correctly, because the complexity of this stuff is going to compound. In closing, though, I think we're going to have to view this thing as a journey that we're going to iterate, because we don't know the answers. And it's not just blockchain. Next week we have this blockchain. You get two buzzwords, like blockchain and AI. What's gonna happen?
Bingo.
Yeah, bingo. Buzzword bingo. But that's coming, right? Because a lot of people are working on the same set of chips. So the question here is, are the lawyers and the policymakers keeping up to date? Because with the internet, it's sort of, it kind of looked like a duck, it had a beak, and it was a duck. No, it turned out to be a platypus, something that we'd never seen before. And the analogy I used to the internet is because, before the web, asking our regulators there, could you do telephony with the internet? Internet's just data. Oh, of course. Well, then you need a telephone company license. When I went to the Television and Internet Licensing Authority, I said, could you do video over the internet? And well, in theory, video is just data. Well, in theory, you could do video. Oh, you need a television license. And so it turned out that because regulation is very siloed by product, the fundamental tension is that this is an accounting revolution. Accounting is the language of business. It cross-cuts sort of across all industries. So we're going from this vertical into this, right? Timber, boom. That's a big change, and that's why it's so hard. Because, does it look like a security? Well, kind of. Does it look like a currency? Kind of. I personally think these are virtual collectible commodities, right? Because there's a finite supply and the signatures are different. So who knows? But the question is, this is an innovation. We're going to have to innovate as much in policy, which is why I'm very excited by what the HKMA are doing and the SFC are doing. Because if we iterate fast enough, Hong Kong, we will be very well placed for this transition.
Good note there, and I think especially since we have a lot of lawyers here, in law in particular, we like our categories, right? What is it? So I think that it requires a kind of new way of thinking about it, and maybe, dare I say, more principles-based. As the new, you have to keep up with the technologies that are coming about, rather than the categories. I wanted to open it up to the floor. We perhaps have time for one or two questions. We might gather all the questions together, then answer it all together. We have 2 questions here. Make them very short, please. Thank you. And briefly introduce yourself. Thank you.
My name is Ian, and thank you for sharing us up with blockchain. I just have 2 questions. First question is, I heard from the seminar last night that blockchain takes a very long time to process. Bitcoin takes 10 minutes per block, something like that. So if the way of the future is blockchain, is this something that has already been overcome? And my second question is, can you comment about the hacker that attacked the cryptocurrency in Japan, also they lost all that money? I'd be interested to hear about these 2. Thank you.
Thank you, quite specific. Another question there?
I'm Ron Yu, IPCC. My question is for Pindar specifically. Sorry, Pindar. Really easy. You talk about identification. And you also mentioned that you would be perhaps the role of banks will change or will reduce. Now, banks theoretically do provide some form of authentication. So what happens when we start eliminating the middle people who are typically authenticators and go to a peer-to-peer model? What would you have for an authentication model then?
Maybe we'll just take one more question and then we'll answer them all together.
Do you see any scope for insurance in identification? Scope for, it's a leading question, but
Sorry, can you introduce yourself, please?
Sorry, Christopher Ray, Chief Legal Officer of Materium. Yeah.
Thank you. So did you want to start with that and then see if others can try with it?
So very quickly, there's 3 different answers. One, yes, for Bitcoin you have 7 transactions per second. I think we're now realizing you can layer the protocol, as Hugh mentioned. There's a layer called Lightning. They released today, there's at least a beta for that protocol, for information on Bitcoin's main network. That can go from, I think Visa on a good day does 70,000 transactions per second. You can now do stuff which is not on the main chain to upwards of 100,000 plus. So that's why this step function. Linear incremental is not going to do it. So I think these public protocols are really hard to scale. Look at scaling Bitcoin. CoinCheck in terms of Japan, we look at there's a missing chain in Bitcoin. There's a missing chain in blockchain, which is integrity chains. I talked about that at the IEEE World Forum on IoT. This is knowing that the endpoint security of the device hasn't itself been compromised. So that's another one. In terms of identity, we have to realize 2 things. One of which is the W3C Verifiable Credentials Working Group is doing great work. There's now a public blockchain called Verus1. 2 things to note there is the directionality of identity with self-administered IDs is changing. In other words, if I claim to be from a university, all I need to do is point to that university and have that university verify my credentials. But the directionality is important, right? The aggregation of personal data is like nuclear material. A lot of these large platform monopolies have aggregated a lot of our personal data, I want it back, right? I'm not on LinkedIn, I'm not on any of that, so no offense to LinkedIn or anything, but I choose to be private. And so we have to realize that these networks are now being identified by cryptographic key pairs, and how we map them is going to be very interesting. So look at Verus 1 as a prototype that's got beta out there, is trying to get up before the GDPR on May 25th. With respect to insurance, all I would say is that the last time we had a big change was the Industrial Revolution. The Industrial Revolution, what made the Industrial Revolution work was the invention of fire and property insurance, so that entrepreneurs can take risk outside the city. If the factory or farm burns down, that they can be made whole. So I think you're on the right track.
Yeah, I won't chime in on too much there. Just a kind of a perspective on the scalability thing. But I definitely agree you need to accept that it's immature technology. Much the same as in the late 90s. Actually, I was setting up ISPs as well, probably not. But in the late 90s, people knew you could connect computers together, but they would have liked to, but they certainly couldn't carry a computer around in their pocket that was connected to the internet all the time at will. And people kind of thought, yeah, it'll get there, but you certainly couldn't do that. And that's where blockchain is in its maturity level. It's still young, and there's a lot of things that are going to happen. Particularly with respect to speed, there's an awful lot of innovation here. But core to most of those innovations is one simple concept. Okay, most of the blockchains we have right now, you put everything on there. Every single thing that happens, you just put it all on there. And these innovations that are allowing us to use blockchains but scale to much higher throughput levels, what they're doing is saying, let's just set things up so you only have to put the data on there if you need to. So let's just send ourselves transactions directly, don't even touch the blockchain. But if anyone cheats, or I just want to exit the system, then I touch the blockchain. And so this concept is allowing the throughput to scale enormously different. And one more comment, just because it's kind of, I think it's a bit of a cliche. People always say, and I know you won't, but people always say, yeah, we need to be as good as Visa in transaction levels. And I say, if you're aiming at Visa, you're aiming way too low. At the end of the day, we're moving into a world where proliferation of digital assistants, whether they're Internet of Things, whether they're physical or virtual, they're going to be making decisions and transacting 1,000, 1,000,000 times a day for every individual. Okay, so this is the world that we're facing. And so yeah, Visa, way too low.
Great. Well, do you want to say something?
I'm conscious of time. Just wanted to reassure you that this kind of conversation, discourse has been happening all over the world with regulators, and we're trying to, we do understand the issue challenges on regulatory side and legal side, and we're also looking forward to the sort of how to deal with. I think one of the major problems with the blockchain and crypto and so on and so forth is the AML aspect of it. So we're really looking forward to solutions that regulators will understand. Thank you.
Thanks so much, Henry. So hopefully you've heard that here in Hong Kong, we've got a bunch of talent here. We've got a bunch of doers and a bunch of innovators, and including the regulators who really want to roll up their sleeves and try to embrace and learn from all this and communicate as well as part of the global community. So the many issues that you've heard as it relates to blockchain, because there's immaturity and the like, but that's a good thing. We're all growing together. So hopefully, with all of you here, you'll join us in this journey, right? To find new and good ways to use these technologies and address some of these problems together. So can you all please put your hands together?
So thanks a lot. So I think that after this discussion, some of you might be very interested to sort of